Devin Choksi is with us. Devin, afternoon. Welcome to the show. 100 points down yesterday, 100 points up yesterday, 100 points, almost 90 points down today. Is this a sign of things to come?
Yeah, good afternoon, Prashant. I think my traders on my institution desk, they say that Nifty has formed a Gajini pattern. It forgets its direction every few minutes, every few days. And I think that is where I think we all are confused about. But let's put it, I think, very simply. I think the direction of the Nifty cannot be predicted, Prashant, for a simple reason that at every highs, the FIs want to book the profits or want to get out and sell off their positions and probably encash their money to invest in dollar assets. So as a result of which market is not basically sustaining any high which it records. Yesterday's high was also relatively on a recover. It was more of a recovery kind of a thing yesterday, and I think that too also I think on a very relatively smaller volume. Today also I think the fall has been gradual and relatively on a smaller volume. So much of a participation is certainly missing as far as our market is concerned. And till that time participation increases, I think you probably would not find the market going anywhere. In my viewpoint, I think we would still stay in the range of around 5400 to 5900. Given the kind of a budget related month that we have and an expectation on budget, we may probably inch up going forward in the next week. And that is where I think one would like to probably put bets on. If at higher levels they don't sell, then probably our market would sustain then in the next week.
Devin, but you think the market has made a near-term bottom?
I would think so, Prashant. I think the lot of sell-off has already taken place. Market has sold off quite some. Maybe I think if not bottom, we are somewhere closer to bottom. I would think and guess that yes, I think 90% of whatever we had to see, we have seen. Maybe I think we are still left with another 10%, which means that if it breaks below 5400, I think we may still go down by another 50-70 points. But that should be the support at which I think the market should turn back. And thereafter, I think one could probably expect, I think, market to take 5800, 5900 course. And I would believe that looking at the depth of the market, which is so narrow, so hollow, that probably at lower levels, the FI traders would not like to get out of the market. They would rather allow the market to look up and then probably, I think, take a call to get out of it. So I would think that yes, at lower levels, probably you would see the buying happening, and maybe I think 5800, 5900 around that level, you would see some amount of unloading of the position taking place then.
Devin, a lot of people have been saying consistently that this is an investor's market. It may not be a trader's market, but for investors, there's a lot of value. Look for the individual stocks that have corrected. But are you seeing that sort of shift in sentiment where investors are willing to buy that argument? Because eventually, if that's the sort of mentality that the market shifts into, then it has to reflect into some amount, maybe not of a dramatic upside, but a moderate upside, but a consistent one. We haven't seen that yet. So maybe investors aren't buying that argument just yet.
You know, your point is valid. I think you definitely see some amount of actions happening based on, I think, the investors wanting to buy at this level. Unfortunately, new money is not coming. The investor is swapping into good quality stocks by selling some of the weak stocks or lesser known stocks. And that's what I think we are seeing as a maximum amount of action. We basically, I think, when we talk to funds and we probably, I think, talk to them, they also, I think, endorse the same thing, and their actions are also basically suggesting that yes, they're swapping into good quality stocks. But as far as bringing the new money is concerned, a serious doubt. I think every investor is fully invested. Nobody is having new money to invest into this market. And that could be one of the reasons for which FIs are basically taking the advantage of getting out of the market. With a relative upside, I think smaller upside or bounce backs also, I think they would probably encash it out. And I think that's a serious concern as well, that the depth of the market, if it is not expanding, and if we are not doing enough to increase the depth of the market by strengthening the local investment arms or local investment investors, probably I think we are going to see this kind of a volatile market for good time, I think, because the size of the investment ticket or size of the investment package that the FIs are bringing into our markets, probably we need to create a commensurate size to bring the or make the fabric relatively stronger than what it is at this point of time.
Also, Devin, is there, I mean, just like you were saying, moving into a sort of quality stocks, also, I mean, there seems to be granularity, if I can call it that, in the investments within a sector as well. So, for instance, you take two stocks today within the auto side, a Mahindra and Mahindra versus the Bajaj Auto. So, no longer perhaps are investors willing to say that the entire auto story is looking good. They're looking at specific picks. Mahindra and Mahindra may not be the best placed, Bajaj Auto may be better placed. Are you sort of making that distinction as well?
Well, I think I would put it this way, that in every sector, individual stocks would show the distinct signs of different kind of a behavior or a movement. You would find the same kind of a thing happening with banking space, in which SBI would probably move differently compared to many other PSU banks. Same way, I think in case of auto, the names which you have mentioned, particular companies like Bajaj Auto, which is already talking of showing, I think, a good amount of volume growth, and which is already talking of protecting their margins, and that too, I think, it is a significantly higher level. Now, if that does happen, then sure, I think people would shift over to a company where they are getting more clarity and confidence. Fortunately, company like Bajaj Auto also has corrected, and that is where I think one could probably find some amount of value emerging. So yes, I tend to agree with one aspect, that not every stock would look same within that particular sector. I think every stock would have a different character, different valuations. In my viewpoint, in auto, Bajaj Auto and Tata Motors show distinct amount of clarity as far as their FY11-12 growth program is concerned.
Devin, Kingfisher, SpiceJet, linked to oil prices?
Yes, I think to an extent, I think it is oil prices, and to an extent, I think counting the future scenario, that if the oil prices does go up, and in such situation, if you have to increase your fare, then the very fact that I think these companies at this point of time are buzzing or have been buzzing more because of the higher amount of seat load factor, that seat load factor itself is, I think, going to come under pressure going forward if the oil prices are not under check, coming under check. So in that sense, I think people who have been owning this particular space or have been taking this particular stock into their portfolio, they certainly would not like to keep it, I think, till the time certainty gets established. And that's the typical character of this business. In aviation business, most of the investors who basically look at aviation business, they cannot be looking at aviation business from a very serious long-term point of view. They may probably, I think, want to ride the momentum as and when it is working favorable in either direction for them. So I'm not totally surprised with the kind of move that the aviation stocks are making currently. Maybe to a certain extent, I think it is overdone at some point of time. But you never know, I think, because when you want to exit, I think you don't look at the price. You just simply, I think, get exit by selling your shares out from your portfolio.
Right, Devin, but there are those like, investors here in the market like Mr. Ramesh Damani, who've, off and on sort of, and they're not looking at these stocks from a trading perspective, but from, a really long-term perspective. Stuff like Jet Airways.
True. I think a time at which I think the valuation was basically working in their favor, probably I think they considered them very favorably and build the position. But if you ask any such long-term investor to book or build the position at current times, again I think the question mark would arise, because I think already the valuations have scaled up. They are not going cheap either. So from a point of view of, I think, creating further ownership, I think one would like to see if the values are becoming attractive. If they do so, then one would buy further. If you are holding on to them, I think you may hold on to it because your holding cost is anyway lower. So I think the views are taken in this kind of a fashion. I wouldn't think that I think somebody would jump into this space and buy it for long term, more because they have corrected to an extent today. I think if we have not seen further correction, then probably I think one would not like to take that call and I think catch the falling knife in a sector like aviation.
Devin, Reliance Industries, there was one day, I think this week, when it looked hopeful that it was likely to break out. I think it picked up a little bit, but it's still stuck at around 920 or so. No signs yet of a breakout on Reliance at all?
Well, I think in case of Reliance, what I see is that I think there is one possibility which could possibly give a kind of a breakout as we are talking about. They have already spent additional amount of money under the approval of government on KGD6 field, and if that does result into increase in the production, certainly Reliance would like to see little better price than what price the government has already committed for its existing capacity of 50 or 60 MMS CMD. So if you are talking that additional 40 MMS CMD capacity has to go live, then Reliance probably may want to have higher price of gas given to them, given the higher cost of production that they've incurred for building the additional capacity. So in my viewpoint, if that does happen, then probably I think the interest will come back into Reliance because the price factor starts working in favor of them for additional 40 MMS CMD capacity of KGD6. And that is where you could see some amount of short squeezing or buying happening because of the short covering to begin with, and a fresh buying because of, I think, new investors start looking at this counter positively. In my viewpoint, I think some trigger will have to happen. A, either the increased amount of gas production, and B, along with, I think, a better price. If that does happen and if it gives clarity for 11-12, I'm sure I think Reliance would start performing better than what it has been doing in last 12-18 months.
Okay, but so far pending those triggers stuck around that 900 rupees a band, give or take a few rupees here or there. While we're talking about oil and gas, ONGC, a lot of people was turning positive on ONGC and GAIL both actually. ONGC in particular?
Not too sure. I think again, I think the government's intelligence in this particular space is not at all clear. Take a scenario like this, that if the ONGC has to bear 100% of or 70% of the duty that they have been bearing on the cane at this point of time, even after Vedanta, then certainly new investor who would like to look at ONGC, they would not be feeling very comfortable. At the same time, I think they cannot do away with the contract with cane that they have. So I think in a fixed situation they are in at this point of time. At the same time, the policy on the subsidy of by the government is never so clear. So anybody who wants to take a view on it, given the higher crude oil prices, still one can't take positive view on ONGC, and that's the unfortunate part. So at least we refrain from taking call on any of the PSU oil stocks because they are purely driven by the government's decision-making power as and when they exercise in favor or against them, whichever you call it.
All right, Devin, we leave it at that for today.